If you focus on GBT, they were offered to be bought for $5 billion. Hey everybody, hope you had a great trading day. There's a ton to go over, so we're going to jump right into it. Subscribe to the channel, click all notifications, because what we go over here is extremely timely and you do not want to miss it. It's not as good as if you're looking at this 3 weeks from now. You want to know as soon as it comes out. Most of the information I put out is timely information. So if you take a look at what's going on here, GBT, we've been talking about this happening since about May, actually, and what's going on in the biotech space and what pharma is going to have to do with all that capital they have coming in, and they're going to have to buy. We'll get to that in a moment, what to do with that trade. But if you focus on GBT, they were offered to be bought for $5 billion. And I just kind of want to walk everybody through this. If you go to the closing price, which is $63.84, at this particular level, you're at a level that's roughly around $4.2 billion. The buyout offer is actually close to $5 billion. So the reason that I'm bringing that up is because there is a disparity here. Now, these things do take time. They could take up to a year to get approval and everything. So I'm not saying it's going to go up right away, but what you want to do is you want to look to establish some kind of range. Let this establish a range, find out where that bottom is, and keep your eye on it, okay? These types of deals do go through. $5 billion merger for Pfizer is nothing, but they do take time. So you're going to have to deal with that time. Very similar to how I pitched this one a while ago. And I just said, look, if you have time and you don't like the volatility of the market, just wait for it to come in, find a bottom like you did here, right? How you did here, and then just start acquiring portions of it. We know that this is going to get bought out for $95. Microsoft's going to take them out. It's probably going to take a year or two to go through the various steps. It took Google 2 years to buy Fitbit. So this is going to take time, but eventually it will happen. There's $15 there. So if you're looking for places just to simply park capital and you don't want to trade, these are great ideas. You're dealing with regulatory approval. There's always that risk, but something like this really sets the stage for what I want to discuss next. And if you've been following along for some time, and if you get the free newsletter, and there's a version of the free newsletter in the description below. If you are getting this and you're looking at what we do here, BPA stands for buy price area. That's an area where we just suggest that you should look at possibly buying. 690. Okay, these are just ideas that I come up with where I could be taking positions in them. Things along those lines. It's for educational purposes. But what you're seeing here, and let's clean up all these lines for a moment. What you're seeing here is this is where we started buying down here. We waited for it to break, and then we just flipped and played this little doji. If you don't know these little patterns, there'll be a candlestick video at the end that will explain it. Okay, why am I showing you this? Because this is not done. Let me put this line back. You can clearly see we broke there. And why am I saying that? Well, when you were down here, these were trading at roughly 30% of all biotechs were trading at cash, okay? You haven't seen that in 2 decades. So the correction in biotech was worse than the pandemic. Now, unless you're a fundamental analyst and you crunch those kinds of numbers and you drill into them, you're not going to know that. But a lot of us that have been in the industry for a while, we know that, and we know how to pull that data up fairly quickly. So when you see those kind of anomalies, it doesn't mean that you're going to stop going down right away, but it does mean that you should start paying attention to the index as a whole. So we did start acquiring it down here, traded it up, added it again at 690, added it again at 10. I still have this entire position. I actually think that you're heading back to here before the end of the year. I mean, it's just a matter of time before everybody starts to realize that some of these companies are completely depressed in value, like you're seeing GBT, right? Just like that. The more of those that go, the more people are going to start searching for the next company. As they search for the next company, they're going to start running scans. Those scans are going to say, give me everything that's trading under cash value, then everything under book value. And you're going to come up with a list of names. The majority of those names right now are probably still biotech. So I think this can easily get to our first target, which is going to be, I'm saying here, but I really think you're going to get up to that 15 level. Let me find that level that I was looking at right there, really. I think that this is pretty much next week, quite frankly. It could easily be. But this is my target. That's what I was saying by the end of the year when I was buying down here. Because you don't know what's going to happen, right? There's ways to look at this chart. When you're buying right here, you're just predicting. There's no real pattern. We have these 2 patterns down here with these tweezers, right? So if you look at, again, I'll link that video at the end. But if you look at something like that, you're being predictive. We let it come up, pull back down. We know that this is a bullish hook, right? So we know that we're being somewhat constructive, so predictive, constructive. And then when we broke above 10, we bought here, the pullback. And then of course, you'll always have to go through one day of just absolute flim flam, right? Where they make you think your hopes and dreams are going to be smashed. And that's when they broke the 21 on me, maybe think they were going to break the 50. And then we pushed right through, right? They always give you that last shakeout just to see, how strong you are. And there they are. Now they're going to just take us higher. And I think that they're going to take us to 15. So don't rule this trade out when it pulls back. And a key thing I really want to leave people with, and we did this in the trading room today because everybody knows how fast this market was this morning. So what we do is we sit there and make sure that we know where our levels are before we go off in the morning. So when you know where your levels are when you go off in the morning and you know that this is your buy area, right? Or one of your buy areas, the other one was around $10. But if you know that this is your buy area, when it hits there, you know to act if you see a pattern. So what you do is you have that set up and then you kind of go from here. Let me just walk you through that. You see that right here. See this right here. Okay. So this is the first 2 minutes. Okay. That's like the mother of all morning stars. I would strongly, let me zoom in on this for you. I would strongly recommend you watch that video. I'm spending a lot of time on LABU because a lot of people are going to say, I missed it. You're going to call the top like you tried to call the bottom, and that does not work. Trade what's in front of you. Let everybody else call the bottom. You focus on making money. So you can see that right here, and you can see that. So when that hit there today, there were people that were in the trading room that just executed. Boom. All you need is your support line and your entry and your exit, okay? You're up 20% on the day just by something as simplistic as understanding pattern recognition and knowing how to draw support and resistance lines. Don't overcomplicate it, okay? Once you want to overcomplicate something, overcomplicate fundamentals because that kind of shows you where you should be, not when you should be. But in regards to that, just take a look at this. I mean, this is just going to ladder itself up. And for those that don't want the 3X ETF, this is the other way we've been doing it since about the low 60s or mid 60s right here, I think is when we finally bought again. But we did the same thing here just on the ETF that's not 3X. There's nothing to do here. Okay, show me another one. Show me another sector that is breaking like this, like this, right? There's only one that's come close to it right now that's intact, and it's semis, and they're setting up perfectly. But you flip 97, and this gets up to here. You have a 10% move there or a 30% move in LABU. Yes, I know I'm spending a lot of time with it, but I think it's important. Do not sleep on biotech. I can't be any clearer. I could spend a half hour just explaining to you why biotech is still undervalued. But there's so many other names that I really want to go over. So this DraftKings, you popped up and then you have like this really wonky bar here. Just watch this. Don't rule this out, okay? Just because they still lost capital, but they lost less capital. That's what you want to see. They are losing less capital. You're going into football season, okay? People are going to be bored. They're not going to be able to travel. They're going to have less disposable income. What do? Okay, when you went through the Great Depression, what was the one industry that lasted and actually flourished? Okay, it was gambling that wasn't legal at the time, and it was Hollywood. If you go back and look at those kinds of areas, why? People want to escape and be entertained. So this actually, which is kind of crazy if you think about it, these kinds of names actually pop up in a recession. And whether you want to call it a recession or a blueberry, I could really care less. It's just trying times. Let's just call it that. But if you look at this, yeah, I think this could really go. I do. And I'm just going to throw this out there. I have a position in it. It's a very simple trade. You should be able to map that out really quickly. This one just looks like it's about ready to just rip people's faces off. Anything, and just remember this and write this down, anything that is coming out and meeting or beating expectations on revenue and earnings, and anything that is coming out, okay, and raising guidance in revenues and earnings, you want to have on your radar, especially if it is in tech, okay? This is just glaring to me. I had a lot of trades that we put on today off the open, so this was one that I wound up getting in a little bit later, frankly. But again, we have the levels marked off that we're interested in so that when it hits, boom, you can make a decision. You either do it or you don't do it. All we're doing, again, is knowing how to draw our levels, right? Don't overthink it. Draw your levels. Look at where they're at, right? It's not a coincidence that my level's here and it just happened to battle there for 5 to 10 minutes before popping up 2-minute chart. So that gives us an entry. There's your entry. There's your exit. Don't overcomplicate it. It's right there. Put it on. If it doesn't work, wait for it to set up again. Put it on again. That's it. Wash, rinse, repeat. I'm seeing so many people get so convoluted and look for the next thing or try to create the next, the next indicator. I'm watching all these people do that with algorithms. Look, you have people with PhDs, MIT, Princeton, with billions of dollars at their disposal creating algorithms, right? It's your goal to figure out how you're going to trade against them, not to think that you're going to create an algorithm or an indicator that's going to even come close to the things that they're doing. It's just delusional. Focus on what works. So one of the indicators I use all the time, and I'll throw this out there, let me clean this up. But one of the indicators I use all the time, and I would strongly recommend you watch this video. It's actually like one of my best videos for some reason, which is so interesting because, I didn't know that many people use this. But this Ichimoku cloud, it took this guy 30 years to develop this. You think that you're going to come out with an indicator in like 2-3 months that's even going to come close? Come on, stop. So it's just not going to happen. So when you see something and you find things that work, like that works. Why does this work? Because it's a leading indicator. Watch that video. Why does RSI work? Because it's a leading indicator. And when you start understanding that, you start knowing which indicators that you should use. Spending a lot of time on that, because if I was trading right now, I would be hyper-focused on the stocks coming out of the cloud, and I'd watch that advanced video that I'll link at the end, and I'd really be watching what's going on with RSI. So I would be watching them very, very closely. But this is setting up to move. You're in the gap. I see no reason why you can't get to $88. Now, we have some economic data that we should just probably cover really quickly before we get to the next ideas. So this is investing.com. I use several sites for my indicators and where to get my economic data. This is free. It's investing.com. Anybody can go there and anybody can use it. And I'll tell you exactly what it's called. It's called investing.com /economic calendar. Okay, you can sort by every place in the world, all the data. I just want to get the couple things out there. So you have core CPI that is coming out, okay, at 0.5%. Now, core CPI does not have the most volatile items in it, okay? Does not have food, does not have energy. So while we can look at it, we already know what the problems are right now that are plaguing everyone. The cost of food and the cost of gasoline, okay? So you're gonna have to look at CPI year over year, and you're gonna have to understand that in that number is going to be food and energy. So you have that at 8:30 Wednesday. This will be watched very closely because we think, listen to those words, we think, there we go again, thinking, that it has peaked. I could argue that I do think that it might have peaked, and I'll give a couple reasons for that. But also Thursday, jobless claims, 263 versus 260. It'll be watched, but more importantly is going to be this PPI number. If the cost of because PPI essentially is how you get to CPI, the cost of creating the goods. So if you look at PPI and PPI comes in hard and CPI comes in hard, that means that prices could drop even faster. So that's really what to focus on, CPI and PPI. And I'll show you why I think that this could actually be a little lower. So one of the core issues is going to be oil, energy, right? That's going to be in there. So if you just take a look at energy, and if you went to fred.com, which we won't do tonight, but you could literally break down point by point what's going on out there, okay? And let's just say that you we'll take from July 30th, okay? And we'll go all the way through July. And we'll come up here and we'll just say, okay, July 1st is right here. And we're just gonna drop an anchored VWAP on it. That's the average price of where crude has been, okay? Just roughly. And then what we're gonna do is just draw this line to it, okay? It might actually be better dependent upon that. So you're gonna have a 6% decrease in the cost of oil. Now that doesn't mean to refine it is going to be cheaper, so don't expect that big of a drop from that standpoint, but just the oil in and of itself is going to be down 6%. Now let's look at food costs for a moment. And so we're just going to take wheat as an example, okay? And this is a generalization, okay? And we're just going to use that month, that's the end of the month, and we're going to say that from here down, this is where you're at. So if food and energy are our two biggest expenses, and those expenses are coming in, this is down 7%, then you can assume, right, there we go again, thinking, then you can assume that you're going to see CPI not be as great as it was previously. Does it come in at 8.7? We don't know. We're going to find out. Now, the one wild card with all this that could be in the CPI, and they do lag, are rents. Rents are through the roof. So that could be an issue. Just remember that. Let's keep looking at stocks. So we don't know what it's going to come out, but I'm leaning towards that. I think it may be weaker. And that's how I've been positioning myself. Now, 3-for-1 stock split supposed to be done August 25th. Tesla, just not the day that you want to see after earnings. I really couldn't find any news besides the fact that people just decided they don't want to be in it anymore. And to me, it got grossly oversold. I actually went long, just candidly. I went long at the end of the day. I tried to trade it a couple times. I actually tried to trade it right here. See the 787 that was marked? You can see that was pure bonk level right in there. Flipped over, that got me right here. Closed, felt like a winner. I was not a winner in my Morgan Friedman voice. So you can see that we just snapped right here, broke, traded back down. At the end of the day, to me, it just kind of got silly. I'm down 7% on what was really a very good, in my opinion, a very good report. So an annual meeting. Now, I'm wondering if there was news out there, which is why I just did out of the money calls. I didn't do in the money calls so they weren't expensive. And I certainly didn't want to do stock with this, dangling like this, because there's nothing technical about that chart. But if you take a look at a couple things and you look at something like this, well, then it starts to make a little bit of sense, doesn't it? Very similar to what happened here. So maybe we're going to hold that level. Maybe we're not. I could draw that a little bit better. So there you go. So we could look at that level, and then it never hurts to just kind of get an understanding of where the 50-day is, where your 10-day is, where your 21 and your 5 are. Okay, so you broke the 5, which is not great, but you sat on the 10. So it's very possible. All I'm looking for is a bounce back up to the 5 for a trade. This is not setting up to break out. You can clearly see that. But it could be setting up to bounce about 3 or 4%, and that's all I really need to make any money on it. So I do like this, but just watch it. I find it really difficult to believe that this is not going to go higher if the market actually goes higher. And maybe we see some light buying, but stocks are holding, and we have a bunch others to go through. Square tried to get through today, but this presented a huge buying opportunity in the trading room. Again, I'm going to just walk through this. The reason I do these videos is to educate, and that's why we just did the whole CPI. So if you can comment on what you want to see next, I answer every single one of them. It just takes a little bit of time. But this was my one level. This was my other level. Off the rip, I didn't get to where I wanted. By the time I started moving today, it just flew. Here, let me show you this. I actually tried to get in and stay in for earnings, but that didn't work. So I didn't have a really good position, so I didn't stay with it. But this was today. And let's just drill into this so that you can see. So you can see these levels right here, right? We had them drawn again. So all I want to do is I want to get to these levels, right? I want to see how we're going to act at my levels. So when I flipped this morning, it was risk on. And we put the trade on, never looked back. They're your best trades, the one that never look back, right? That never give you that retest back here. They just ripped. This just ripped, came back tested, went through our other levels. You can see them right here. These were marked previously, right? It's very important to learn how to draw your levels properly, right? See this? You know where you could get back in again. You know what this pattern is. You go from there. If you overlay that particular pattern with this RSI, I mean, it's like being hit in the head with a frying pan. It becomes extremely obvious that you may have a trade there, right? If you do this for a while. So whether you learn to execute on that trade or not is more mental. And that's not something I really dive into, but I probably should do a video on that. So anyway, so if you can see what's going on here, wait till you close above this. This was actually a good quarter. I was very surprised by this one, PayPal, and this should be on your list for next week. This 94.51 is holding. Bonk, tries to rally, come back down, okay? Pure support, 94.50. Watch this and watch that level. Okay, Elliott Management took a stake in this company, 9%. They did not take a stake in this company to make 10 points. Okay, that's not what they do. They come in, they're advisors. They also took that stake in pins, if you remember. And what that's going to do for us is set up something pretty interesting, because PayPal was interested in buying pins earlier. So there might be some kind of, I would say, affiliation there at some point is kind of where my head's going with it. That's what I think could happen. You never really know what's going to happen. I do want to go through just, at least 2 more here that I think are worth your time. So this AMC, this was just a great trade today. I had 16.13 as my level, and my alert didn't go off. And frankly, I was trading so many other things that I didn't even spend the time to look at how perfect this was off this other level. And it just flipped and it went. So just understand why it's doing it. They're going to issue this dividend, this APE dividend. I forget how much it is, but I think it's like a couple bucks. But what it does do is it really is a great way to really get over on the shorts, because they're going to have to write a check to the shareholders of this company. So if they keep doing that and issuing dividends, whoever is short the stock, okay, has to come out and pay them, the long holders, which is just absolutely hysterical. So kudos to him for coming out with a brilliant strategy. I will say this about the CEO, as far as raising capital, brilliant. From free popcorn from everyone here to the APE dividend, you have to give it to them. So what do you do now? I'll tell you right now, no one is going to want to be paying the borrow on this, realizing that they have to write a 10% check on their position to somebody. No one's going to want that. You're going to be asked, what are you doing? So if you're running a book and your PM comes up to you, your portfolio manager comes up to you and asks you what you're doing, you're probably going to be like, I don't know. And you're probably going to close the position. You don't want to be this guy, right? You already know you don't want to be him. Right? So you're going to hit a point here where if you flip this, you can go again here. It was a sickly brilliant move. And quite frankly, I missed it today because I had so much else going on. I have a very large position in this. And this is from the newsletter. Again, there's a free version below, but I would focus on this. And you might see light volume on Monday or Tuesday, and we can kind of talk about that for a moment. You might see light volume there, but there is nothing that was broken today at all. Nothing. You gap down. We bought the gap down. I bought a lot off the open. I mean, it was a gift in my opinion. And then you see it, and then you wind up trading up. So once again, what happened? We just didn't hit a new high. I mean, maybe after 8 days, we're getting a little spoiled. So could you have light volume Monday, Tuesday going into CPI? You could. You could have weekends. I would watch this 418 level here. But the big glaring 800-pound gorilla that's going to force investors back in here, especially the CalPERS types of investors, yep, that's the VIX. And the VIX is setting up to break. Now, I don't like dojis like this. I like confirmation, down, panic. I didn't get that. But this line is when the entire move started. So the entire break of our good time ended right here. See this November 3rd, November 4th. And this trend line is responsible for every single sell-off in the SPY if you go and take a look at this. Okay? So if you went back to here and you kind of look at the fact of where you are in November and when you hit that line, how you wind up trading down, how that fits and ties in with that December, how it ties in with the March, how it ties in with where you are right now. That's why this level's so pivotal, okay? It's so pivotal to watch. So keep that in mind. I really like the position of the market, but the VIX to me looks like it's going to break. We're obviously in a recession. You're seeing the part of this where you have the inverted yield curve. Let me explain the inverted yield curve in 2 seconds. The 2-year is paying more interest than the 10-year. That's your econ lesson for the day. Your 2-year treasury is paying more interest than your 10-year. Why? Because they know in 2023, 24, they're going to be cutting rates. So if they're going to be cutting rates, right? If you're going to have to cut rates, where's the money going to go? It's got to go into equities. It's just a question of at what level and what magnitude. But with the VIX dropping, they're running out of places to put capital. So just kind of keep that in mind. Nobody wants to hear about private equity right now if you're running a large fund. Nobody wants their money tied up like that. Those firms got absolutely killed. So I know I threw a lot at you. If you're interested in the trading room and you want to see a preview of it, right here in the top right corner, there'll be a link. It's open for another 2 days by the time that this comes out, and then I'm going to shut it down for an undisclosed period of time so everyone can get assimilated to it. So that's pretty much it. If you need anything, reach out. Have a great weekend. Trade to win.